Welcome to today's video. My name is Madelon Talks and this is Madelon Talks. Today we'll discuss the most important macroeconomic and crypto related news of the week. And in this week's video we're going to discuss some very important macroeconomic subjects when it comes to the bond market and to the collapse of the financial system. We're also going to take a look at the crypto related news, which is a lot. There has been so much going on lately, so we're going through that fast in this video. So for now, I'm going to put myself in the right corner of this video and I want to have a little celebration because my channel reached 5k subscribers in less than, I think it is 4 months now that we've been doing this channel, and I'm so honored that we reached 5k already with my Dutch channel, which is now 65k subscribers or so. It took like 1.5, maybe even 2 years before I reached the 5k subscribers. So thank you so much for your support, guys. And if you want to support these kinds of videos more, don't forget to press the blue button and don't forget to subscribe if you'd like this content. And we're going to start off with this news article, and this is an important one because the International Monetary Fund, the IMF, warns that inflation could prove to be persistent and that central banks may need to act. And we've been discussing this subject, the inflation subject, for over the last couple of 3 or 4 months already. And why is this so important? We right now see that inflation is running away really fast. And this means that your and my purchasing power is decreasing. The value of our money in the bank is decreasing, and it's decreasing fast. So usually the central bank steps in and make sure to higher their interest rates or do something with their purchasing, their bond purchasing, lower the bond purchasing. But we know that if they step in, that will cause some troubles, because if they higher the interest rates, then no one is able, or at least almost no one is able to pay their debt anymore, from governments to normal citizens when having a mortgage or something like that. And when they're going to lower their purchasing program, the printing of money, buying government debt, then the government will have some problems, and we're going to see some problems on the bond market, because then the interest on the bonds will go down as well. The real interest will go down. So that's going to be a big mess. But not stepping in is going to be a big mess as well, because then the inflation will rise faster and faster and faster. And this means that we will have the wage push inflation, which we spoke about in the last couple of 2 videos. And then we will have a big problem as well, because the prices will keep rising and the wages have to rise again, and then the whole system will blow up. So they're in a really tough situation in which they actually don't really know what to do. The only thing is that they will keep going, letting the inflation rise. Or at least I think that this will go through until 2022, maybe 2021, 2022, maybe even until the beginning of 2023. But then they need to act. And they know that they need to act, because that's why they invented the Great Reset. There must be something done. And they're probably going to do it with the central bank digital currency. But right now, nobody knows exactly how they will create this. So for now, the IMF warns, and this has something to do with managing the expectations of the market, so that the market won't react really heavily on the news from central banks or something like that. So they will announce what they're going to do before they're going to do it, and they will announce it really early. Jerome Powell has said already that they want to higher interest rates in 2023. They need to because of the inflation, but they don't want to, because then we will get a lot of problems. So this is the subject that central bankers need to deal with, and we on our side need to deal with the fact that this is ongoing, and that we need to have, or at least need to know what to do with our portfolio, what to do with our assets, and what to do with our own asset management. Okay, and we just discussed that we need to do something with our own portfolio, but when it comes to macro and microeconomics, there is something in the middle. And that thing in the middle, for example, we've had a lot of restaurants that have had problems finding new employees. And this had something to do with the wages. The salary was way too low for their housing prices, for the rent prices, for getting food in the supermarket. So those people said, I'm going to stay home and I just want to have money from the government, and I will sit down, work without work, and this will pay me almost as good as when I work in the restaurant, and I work my ass off and I don't get paid enough for having a normal standard of living. And this wasn't really a big thing. We saw McDonald's offering iPhones. We saw a lot of strange things when it comes to getting people into the restaurant business. For example, here in Holland, we've had campaigns around Spanish cooks that they want to get into Holland in the restaurants, because in that country there is a bit of an economic crisis, or at least it isn't as good as in Holland, so they're luring people to work in Holland. But now there is a trucking crisis in the US, and this means that they can't find people who want to drive trucks. And this is a bottleneck for the supply chain when it comes to goods and food, for example. So there aren't a lot of truck drivers that said the same thing as the people who are working in the restaurant. My wages are too low, and or they just said, I want to stay home because I can work from home when doing another job or something like that. So then you have inflation coming from the other way around. So not only the inflation because wages have to rise, but also because the scarcity of the products. Because if truck drivers stay home, then it's harder to find new truck drivers, the wages have to increase, or the products, the amount of trucks that is driving are going down. And this means that this will have a pushing effect on the prices of goods and services. For example, in Belgium, we saw that the year-on-year inflation rate from the month June was a bit over 20% when it comes to the producers' inflation rate. So the producers always look for the commodities, and if the commodity prices increase, then the producer's price will increase, then the end products will increase. The end products, the price in the supermarket will increase as well. So there has been a lot of inflation, and it doesn't look like it's transitory because it comes from so many different angles. Because it's come from scarcity, it's coming from wage push inflation, it's coming from the fact that they're printing so much money, that the interest is so low, and there is not an easy way to fix this. And we saw Jeroen Blokland tweeting about the fact that Germany's bond yields is back below 0.5. And this is where it becomes really scary. The bond market is going insane. The bond market is doing really strange things. For example, to be clear what the bond market is actually, the 10-year German bond yield is the yield you get on a government debt, piece of debt. So it's a bond is a purchase you can do when it comes to government debt. So if the government doesn't have enough money, it issues bonds, government bonds with, for example, a 10-year yield. And what's strange about this is that these German bonds have a yield of minus 0.5. So this means that if you buy this bond, then you will get a negative return. Who wants to buy a bond with a negative return? This is really strange. So this means that people don't trust buying bonds. But the strangest thing is that the ECB, the European Central Bank, buys these bonds. So if you want to sell your bond, you can easily do it because you know that the central bank will buy it back. And that's why this yield usually is way higher. But right now there is so much going on with higher inflation, with central banks that may need to act, that even this bond issuing status is going down. The bond interest rates going down. And in the US we don't see it right now. We don't see negative interest rates yet, but there probably will be a time when we are going to see this in the US as well. And then we have Lynn Alden. She's saying the following, and this is where it all comes together. The blue line is the total US household net worth in dollars, currently sitting at 137 trillion. And the red line is what it will be dominated in ounces of gold, and this is currently sitting at 76 billion. So this means that your purchasing power is decreasing. It actually doesn't say a thing about people getting more wealthy. And someone explains this really good. He says, in real term, the average American isn't getting richer. Increase in average nominal net worth is an illusion created by inflation. And that's actually what Lynn Alden is saying with his tweet as well. So when it comes to having gold, you will remain your purchasing power way better than when it comes to having or owning dollars. And then I want to discuss something really important, because you might have heard about the repo market, the overnight repo market, when banks have to flatten their bank reserves overnight. They have to go to the central bank and they have to arrange an agreement. And this is where it becomes really interesting, because this is the overnight reverse repurchase agreements. And as you can see, there are more agreements in terms of US dollars when it comes to billions in this year 2021. And this is insane. And Jeroen Blokland says, this is probably nothing. This says something about the heart of the economy that's currently on fire, the heart of the US economy. But we will dive deeper into this over the next few months, over the next few weeks, when doing videos and doing analysis when it comes to macro. But for now, we're going to take a look at Bitcoin. And this is an interesting one, because 64 million Americans own Bitcoin, making it one of the most held financial assets in the country. And this is insane that people own more Bitcoin than they probably do when having stocks or something like that. This is insane. This is huge. This is a great news article when it comes to Bitcoin, and it's really bullish, even though the market went down with like 40 or 50%. And when it comes to negative news, if we have the good news, we also have to discuss the negative news. Then we have to take a look at this news from CoinDesk, and this is all about Moody's lowering the rating for the El Salvadorian bonds. And they do this because of the negative outlook, partly due to the Bitcoin law. And Moody's is a company that's doing, or at least giving, ratings for bonds from, for example, banks. So if banks have a portfolio with a lot of mortgage combined together, then Moody's or Fitch or whatever will say something about how good these mortgages combined are. For example, if you have watched The Big Short, then you will know that you have gradings from AAA and BBB and plus and minus and something like that. If you haven't watched The Big Short, then you should. So Moody's is lowering the rating for El Salvador, and that isn't really good news, because some lenders that lend money to the country may say that they want to have their money back or something like that. But I think that the Bitcoiners will figure something out when it comes this far. And there is a new law in Germany that's allowing institutional funds to hold crypto, and this comes into effect at the 2nd of August. So this is in effect already, and this means that as much as 415 billion worth of investments could flow into cryptocurrencies, and that's of course bullish again. And then there is this news: global precious metal retailer Kitco to issue a gold-backed stablecoin. And in my honest opinion, this is where everything comes together. Kitco Gold will be backed by physical gold, stored in vaults, and tracked by real-time market value of gold, of course. And we just spoke about the fact that Lynn Alden tweeted something, or at least she hinted about the purchasing power of gold. Gold remains its purchasing power. And gold has been done this for the last couple of thousand years or so. And this is where it becomes really interesting, because there is a lot going on about stablecoins over the last couple of weeks, months. There is new regulation incoming, but when we know that this gold is physically backed one-on-one, or at least enough gold backed by gold, then this can take a leap. We know that the monetary system worked pretty well when the dollar was tied to gold, and if we know that this gold is backed completely under regulation, under registration, then this is gonna be really interesting, and we're going to follow this as good as we can. And then there is news about Binance, because over the last couple of weeks we have discussed Binance really often. Binance is really under pressure from governments, from regulators, and they're trying to get their registrations and follow the regulation guides from very different countries all over the world. And they have to do some steps back before they can get registered. And that's why some partners cut the ties with Binance, at least for the moment, until they fix their regulations and fix their registrations. And this means that they have to step back in order to do new KYC, to do new CDD, to know your customer. And this is really normal when it comes to having an exchange or a broker or something like that. We have seen this in Holland very often, when exchanges had to step back or brokers had to step back in order to get their regulations as normal. So still, even though some companies cut the tie with Binance, they are still innovating, and that's what I really like. Binance is bringing payments to Shopify, and this is quite nice because the company announced on Tuesday that they have a partnership with a crypto to fiat hybrid payment platform called Amagi Pro to enable peer-to-peer crypto payments at over 2 million global merchants through its payment application Binance Pay. And when we're talking about Binance, I've had a lot of questions about people asking me, Madelon, how can I do payments with my stablecoins or with my cryptos, or how can I do it really easily? And I spoke about this before because I've been using this card, and I think that it's nice to show you how easily this has been done. I use it in a supermarket. I use it at Uber to get a taxi. You can use it when doing your nails or something like that. So I use it everywhere, and you can get a cashback of 4% or even more if you have a lot of BNB on your account. But I just wanted to show you quickly how this works. I will put myself more into the screen. So I want to show real quick how this works. As you can see right now, we're in the Binance app, and here we have my card, and I have my card as a normal card as well. And the nice thing about this is that you can put a balance on your card, and then you can choose which coin you want to spend as first. So if I want to spend just euros, then I put my euros up front. I can put it above the BNB one. I can put Bitcoin above all the ones if you want to like spend your Bitcoin or spend your Ethereum, and you can just pay at a merchant, and the merchant will receive the currency they prefer, the euro or the dollar, and it's that easy. So I'm really a fan of using this. If you would like to have one, you can just order one for free. I will put a link up here to the Binance card as well. You can just order one for free and just check it out. It's really easy, even though people say it's really expensive to buy things with Bitcoin. It's not that expensive. It's really cheap actually. And what I also have, by the way, I also have a wallet for doing Lightning transactions directly when merchants have, for example, there are some merchants in Amsterdam and they are okay with spending Bitcoin or receiving Bitcoin, and you can just use your Lightning wallet. I like the blue wallet when doing Lightning transactions. I just want to discuss that the Bitcoin liquidity supply chart shows that there has been a lot of a liquid supply when it comes to Bitcoin, and we're at the level we've had when we topped and when the price stopped, but the price way lower. So the price has to grow when it comes to the on-chain metrics. And we also looked at this tweet from Will Clemente. And Will Clemente tweeted about the fact that, historically speaking, following each touch of the lower S2F, the inflection trend line, Bitcoin has gone on an absolute tear. So we now, and you can't see it that great, but we hit this level, and this means that we have to go up, or maybe even one touch more, and then go up back to the red zone. So we are on the lower band of the stock to flow, so the stock to flow deflection line, and we're probably gonna grow real fast over the next couple of weeks or months. And when looking at Bitcoin all-time highs, this is a chart from a coin metric using the close prices of Bitcoin. And as you can see, in this era, the era from 2012 until 2016, we found out that there were only 52 all-time highs. And in the next era, from 2016 until 2020, until the halving 2020, we saw that we've had 74 all-time highs. Right now, we're only sitting at 30 all-time highs, which is actually way lower than this era. So we might have seen something that looks like this, and we might gonna see something that looks like this again. At least everything that's or at least a lot of things, on-chain analysis, stock to flow analysis, also when looking at the all-time highs, is quite bullish. And also Plan B said the following: July closing price 41,490. It bounces from the lows like clockwork. So Plan B is still completely in control. And we look at the compare of the bull markets, we see something that's looking quite interesting. So we want to have the price moving upward in the fourth era, but we just have to wait. And then we're going to take a look at the chart of Bitcoin. And as you can see right here, we've had a rough time. I will zoom out a bit so you can see it way better. We've had this rising wedge. The price of Bitcoin went down after we formed this rising wedge. I will show it to you. What a beauty this is. So we hit the target point, almost hit the target point. Then we had a new head and shoulder pattern evolve. I will show it to you what happened next. We broke out of this head and shoulder pattern. We hit a new low, a bit lower, but the body of the candle closed very pretty. And now, then we hit this falling wedge. And usually when you see a falling wedge happening in a downward trend, then it breaks out upward, and it definitely did. So this is the, or at least the top that you could say was the top. So we hit 40k, that was the target point exactly. We hit 40k exactly, and now we've reached a high around 42.6. And now the big question is what's going to happen next. Usually we want to form a cup over here, form a cup and handle or something like that, maybe even like this. Not sure yet, but right now we're seeing this head and shoulder formation. I saw some people drawing a horizontal line as well, ascending triangle which breaks out upwards. Most of the times it's almost the same as having a head and shoulder pattern. And right now the big question is, how low will we go before we go up. And this is a very important resistance line right now. So it's 43.3 that we are watching right now. But it can take quite a while. It can take up to the end of August, something like that. Maybe a bit earlier, maybe a week before the end of August. Right now we are at the 5th of August. So we have like 2 more weeks until we know if we break out upward again. And it might take a while, but it's worth the wait. So right now I'm quite bullish, even though we're gonna see new lows. Right now I'm still bullish. If we break through this area, the 33.6, then we have a bit of a problem, or at least I'm not that bullish anymore. But for now I'm really bullish, and I want to suggest, guys, to take a look at my support link page to find out the best deals for the partners I work with. I've been working with a lot of these partners for over 4 years or maybe even longer, and I've had a lot of questions about gold and silver, about my favorite broker, a charting tool, doing trading, doing even leverage trading, for example, but only for experienced traders. Make sure to only do that when you're an experienced trader. So take a look at my support link page. I will link it down below as well. And for now, I would like to suggest to make sure to follow me on Twitter, so you will get notified when I post pictures on Twitter. So you will get notified when there is new important content that you need to know. And for now, I would like to thank you for watching. Also, make sure to don't forget to press the blue button if you like this video. I enjoyed making this video again, and I hope to see you soon at a new Madelon Talks. For now, have a great week. Bye!